Afternoon and good evening to all. Myself Vaibhav. I welcome all of you to today's session of Visual JForex, in which we will continue our work using the indicator volume. We will see how we can implement the algorithmic system on the Visual JForex platform using this indicator to look for the optimum trade entries and exit. So let us now head to the Visual JForex board, which has been developed by the Dukascopy Bank SA. In the last session, I had explained to you the setup so far, which includes this instrument subscription where the Euro USD is being the instrument of choice. Afterward, the position amount was defined at zero to make sure there is no existing pending or open position on the account prior to the execution of a new trade. These two volume indicator blocks were added with the configuration of the hourly time frame with the varying shift values. Shift value is the look back period, and to look at the price volatility and to set the conditions accordingly, we are also taking the help of this get historical candle of the hourly candle period. These are with the varying look back period 1, 2, and 12 respectively. And then to pinpoint the exact entry point, these 10-second blocks are also being utilized to look for the difference of the closing and opening value, whether it is rising or declining. We have used this calculation expression block to calculate the difference, and then we will set the conditions accordingly. Now I will briefly explain to you what the logic is going to be for the execution of the buy trade. This session will be dedicated to getting the configuration right for the execution of the buy trade, and in a subsequent session we will deal with the sell side of the equation. So for buy trade to happen, we need the underlying instrument to have declined quite a good amount, and after that, it should be losing momentum. So it should be stabilizing on the lower level, and for that, we will use the volume as a one of the parameter where we see that the volume is on the decline. That means the activity on the lower prices is reducing. So that will be the time when our algorithmic system will start looking for the trade entries to go for the long trade, and we will also consider the price data over last 12 hours. So for that we will be comparing the closing value of the last hour, second last hourly candle with the hourly candle which had closed 12 hours back. We will see if it is lower enough compared to the prior candle, and now it should be starting to rise, or even if we don't set the condition that there should be imminent rise, and only if we rely on the volume, I think that is also going to be enough. And since this series is for a simple algorithmic structure, I think to avoid the complexity, we will simply take the help of this volume data, and we will not set this condition that there should be reversal of momentum on the price formation. So we simply want this volume data to show decline in activity, and we will compare the last hourly candle close to the prior hourly candle close. It should be lower, and also the closing value of the last hourly candle should be lower compared to the opening price, and also for the second last candle the closing value should be lower than the opening price. So that will mean in the last 2 hours there has been good enough decline, and then we will consider the second last hourly candle with the hourly candle which had closed 12 hours back, and it should be lower than that. So that means the momentum has been bearish for at least last 12 hours, and since we are seeing reduced activity on the volume side, that means the seller's interest is now on the decline, and we are anticipating a possible reversal of fortune for the underlying instrument. In this case, the instrument is Euro USD. So let us now get back to the Visual JForex board where we will start implementing this logic. So here we have this calculation in place. Now we have to look for the adding of entries, and for that we need setup which is going to involve logical as well as mathematical components. And we will first define the conditions, and then as we need to define certain variables, we will bring in the calculation expression block as and when needed. multiple action. I'm not joining it here right now as I am quite sure we are going to need to add further calculation expression block. So I will join this to first if block and then we compare the volume data. So the volume 10, which is the last hourly candles volume data, it should be lower compared to the volume 14, which is the penultimate hours volume data. So first input less than second input, and then we compare the closing values and the opening values of these three candles, candle 15, candle 16 and candle 17. In all these three cases, we need the closing value to be lower than the opening price. So I am going to compare the closing and opening prices of these three hourly candles. Auto created variable. Candle 15 candle close needs to be lower than candle 15 candle open, and is going to be first input less than second input. Candle 16 candle close less than candle 16 candle open. So again this is going to be first input less than second input. Candle 17 candle close less than candle 17 candle open. Alright, now we will compare the closing value of the candle 16 with the closing value of the candle 17. So here candle 16 candle close needs to be lower than candle 17 candle close. So again first input less than second input. Alright. So once these conditions have been fulfilled, we can start looking for opportunities to go long provided there is some reversal on the price actions front. So for that we will be placing the order on the higher side compared to the closing value of the last hourly candle. Okay, so here we are. Now as and when price starts to drop below the last hourly candle close, we will look to initiate the trade, and as I said we will be placing the order on the higher side. So we need to define the price point, and we will do that once we get the trade command block in place. So for the time being, let us compare the closing values of these 2-second, 10-second candles, candle 18 and candle 19, which has look back period of 1 and 2 respectively, with the closing value of the candle 15, which is the last hourly candle. So we are going to need two more of the if blocks. And here candle 15 candle close will be the common input variable. Candle 15 candle close, and candle 18 candle close, and candle 19 candle close values. And candle 19 candle close. So in this case, the first input should have been higher, and then in the last 10 seconds the price drops below the last hourly candle close value. So we join it is first input greater than second input, and after this we will get in the trade command block, which is going to be a pending open order. So here first input less than second input, and this will be a buy order, buy stop, buy bid. Price, now we have to define these input parameters. The price, default instrument remains as it is. Trade amount I will change to 0.1 million. Slippage of 2 pips is good enough. Stop loss and take profit, we can make it dynamic or we can make it fixed. We will see to it when we are done with defining these input parameters. Price, and as I said, we will be placing the order on the higher side compared to the current value. So for that, we will take into account the difference, whatever is the decline in the last hourly candle from opening value to the closing value. We will take that difference and when we will add it to the last tick price. So for that, I'm going to need mathematical component, calculation expression. Last tick grade plus this difference which we had calculated in the prior session. So this will be A1 plus A2 and this will be our buy execution price, BEP. All right. So I will place this on the input value, execution price. Stop loss and take profit, we will go with the combination of 1:2, or you can make it even 2 is to 3. Let us make it 2 is to 3. So I will keep a stop loss of 20 pips and take profit of 30 pips. So this time around, we are going to have this fixed pip defined, take profit and stop loss. And now order validity. I think order validity of 2 hours should be good enough. So for that, we need another of these calculation expression block. Then we take last tick time and add it to 3.6 million ticks multiplied by 2. So I will create a new variable with the start value of 3.6 millions. Okay, then multiply it with 2. 1 hour has 3.6 million ticks, so that's why I'm multiplying it with 2 to make it sure that it is of 2 hours. And then this will be added to the last tick time. So A1 plus A2 into A3. So this is now going to be OVT. Oh, I think we have to make sure that the data type matches. So I will create the variable with the long data type here. I will name it OTV and then assign to this output value. So its value will be derived from this calculation. All right. Okay. So with this, our buy side of the equation is ready. I hope you have been able to understand the logical requirement and then the execution of it on this Visual JForex board. So that's it for the day from my side. If you have any query or any idea to share, you can write to me in the feedback section. For further coverage of the market developments, do check out the Dukascopy Analytics page. We are also available on the Facebook. You can join us there for any in-depth discussion on the ongoing market scenarios. Do check out the JForex platform, which you will need any case for carrying out the testing on the historical data once you are done with the formation of this algorithm. So all these links have been provided in the bio. Thank you all for joining in. See you next time around. Till then, goodbye.